People like this, they're now 2 standard deviations oversold. Reliance in India, incredible company, building network on top of network. It's a sleeping giant that nobody even knows. It's the next $1 trillion company. The crypto companies like Coinbase, Galaxy, these are network adoption models, and they've been massively oversold because of the inflation episode, which is why crypto got oversold too. I'll come on to crypto in a bit. So, semis, biotech, robotics, gaming, metaverse, they're all in the buy zone. So I constructed a basket, which is the GMI exponential age index of a whole bunch of these equally weighted. And what you can see is we had the massive sell-off that got very oversold back in 2020, as everything did. We saw the enormous bull run. It's a bubble phase. And then what happened is we got to pretty much 2 standard deviations oversold. Now, do we hit this 2 standard deviations in the next few weeks by another sell-off? Possibly. We don't need to get there. But the point being is, even if we stay below the average line, the red line, we will end up going up because that's the adoption. And if you get central bank balance sheets doing stuff, you'll get accelerated and we'll go to the 2 standard deviations overbought and the upside is enormous.
Hello and welcome to Money Talks. In today's video, former Goldman Sachs executive and Real Vision CEO Raoul updates about the recent trends in cryptocurrencies, gold, equity markets, and all other asset classes. Raoul discusses the speed of crypto adoption and the rate at which Bitcoin is being accepted by the institutions. Raoul also says that potential downside in the stock market may threaten crypto prices in the coming months. He's looking at the Nasdaq and says that from a technical analysis standpoint, the index is on the verge of potentially making lower lows if its critical support is broken. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. So without wasting any time, let's dive right into the video.
Finally, let's get into crypto. Crypto network adoption model. I've talked about this. I updated this chart a while ago. Most of you haven't seen it. The crypto adoption is now massively outperforming the internet. It's been growing at about 165% a year versus 85% for the internet for the same period of time now. So this is the fastest adoption of any technology in all human history. We are going to get to 5 billion users by 2030, i.e. full-scale adoption of crypto as technology for the internet of value and a host of other things. And 1 billion users comes in 2024. And that's by lowering the rate of growth again. I'm not assuming that growth stays as red hot as it has been. And in fact, growth has been slowing. So I think that is the magnitude of what is happening. And you can own this, unlike the internet. It's much easier to own because you own a share of the network by owning the crypto. The next chart shows it in a more dramatic way, which is not on a log scale. And we're assuming the internet was growing at 43% a year from about year 6. Year 1 in this case, or year 0 in this case, is 5 million users. We took crypto and internet users at 5 million and then looked at their growth as they adopted. So after year 6, the internet was growing at 43% a year. So if crypto grows at 43% a year, it gets to year 10, which is 4 years' time, at 1.2 billion. But if it continues to grow at 76, which is a lowering of growth versus the 165% it's doing now, we get to 2.8 billion. I mean, these are astonishing numbers. The world has never seen anything like this before. So whatever happens, whatever the trend rate of growth is, this is exploding. So my macro backdrop is massive. Short term, however, the total market cap of crypto, year-on-year rate of change, has stopped growing. And we've had these periods of time, which are the bear market. So in 2020, we had a period of time of this. But I think if the central bank balance sheets are coming back into play, if growth, i.e. growth equities, going up because global growth is falling, then crypto's going to do very well. And I know there's a lot of people expecting a crypto winter. I don't think that is the case. I think we need to watch what happens to the economy. If inflation goes, crypto takes off. Inflation just needs to moderate.
Recently, Bitcoin tumbled the most since January as the rout in financial markets deepened in the wake of increasing concern of recession. The largest digital currency fell as much as 11% to $35,611, the biggest intraday drop since January 21st. Ether also slumped as much as 8.7%. Avalanche and Solana, among some of the largest gainers after the U.S. central bank raised rates, were also down as much as 15% and 11% respectively. Investors are jittery about the Fed continuing to raise interest rates after yesterday's 50 BPS hike. Additionally, the potential of additional rate hikes makes the trajectory of the global economy uncertain.
If I use Amazon as my example of just encapsulates the whole space, this is a network effect stock that has gone up relentlessly in the log channel, as Metcalfe's law suggests it should, unless the network fails and then it turns off. It has various S-curve moments, which is when the market's not sure, is Amazon going to survive? And that one was in 2014 when it fell 30%. That was like, is Amazon just a bookseller? Is this cloud thing? What is this? This is nonsense. They're an online retailer. Why are they doing it? Well, what happened was the next explosion of growth and their network adoption model with these multi-networks that they've built. So you get these sharp sell-offs. They tend to go to 1 or 2 standard deviations oversold, or they trend sideways. So Amazon is basically 2 standard deviations oversold by doing nothing recently because growth names have been hurt, and it's been relatively hurt. And so you should be a buyer, not a seller. And a lot of you will be saying, yeah, but inflation has changed everything. Inflation does not change the technological advance or the rate of adoption of networks. I'm sorry, it just doesn't do that. And so if these networks grow and revenue models increase, and all of these are proven over time that revenue comes, then any sideways trending is a correction and they should be bought. So the other way of looking at it is I looked at the NASDAQ. It's 2 standard deviations oversold versus the Fed balance sheet. This is to now take into account the denominator effect. What are we supposed to be really looking at here? And the NASDAQ is now cheap. So the NASDAQ is cheap in where it should be. I think that is interesting. Can it get cheaper? Of course it can. But is it close to finishing? Yeah, I think it pretty is. I want to buy stocks into weakness. I want to buy exponential age. The kind of names I'm looking at, without giving everything away, is Tesla, Meta. Meta's fascinating. Everybody hates it. It's breaking through the log channel. It's 3 standard deviations oversold. Either that network is failing now, which it could be because people don't like it, or their pivot is going to get rewarded, much like Amazon in 2014. I kind of not going to fade Facebook. And I know that's a bad thing to say, but I'm here to make money, not to have a philosophy on life. ARK. I'm interviewing Kathy. I really respect Kathy. I can't stand the way people just don't like her because of technology and people fear technology. I just think it's unfair. Now, she constructs her portfolios and the stocks that she picks, yeah, she needs to own that, and that's fine. And she does. The construction of the portfolio is different. I'll talk to her about that. But I really think she is right. I think her and the other one is Scottish Mortgage Trust, who are probably the single best technology investors on earth based out of London. Sounds pretty boring, Scottish Mortgage Trust. Look at the chart. These guys are amazing. So, if I look at this chart right now, that is currently at 60, if you were to just hit the top of the channel in 2024, you're at 200. Okay, that's pretty good. I'll take that. And these are long-term buy and hold. This is an opportunity we've not been given since 2020. So anyway, I love that. And sentiment in equities couldn't be worse. Look at this chart from my friend Northman Trader. Sven put that chart out recently. That's the AAII Bull Index. People have never been more bearish. Probability of the market collapsing further into some structural bear market that everybody's freaking out about, pretty slim, but it's possible. Okay, moving on. I told you there was a lot to get through. There's a lot to get through. This is my whole macro framework. This is what it takes to have a macro framework that's robust, that's not just based on 1 or 2 data points. And all of these have got an enormous amount of work behind them, years of work and thousands of other charts. I mean, Remy and I, Remy Tito, who was a co-founder of Real Vision and also works with the Global Macro Investor, we've got thousands of charts in our database and a hugely robust and deep framework, both cyclical and structural. The dollar is basically the financial conditions index. The dollar seems like it's still going up. Financial conditions index tightens financial conditions, brings the ISM lower, brings growth lower. So the dollar is the key variable, as I always say. Watch the dollar, because the dollar is the wrecking ball. So how's the wrecking ball doing? Well, for a while I've been saying, when it got to the bottom, I'd say it's going to go at least to the top of the range. That was my bet. So here's the DXY, and here we are at the top of the range. Do we break on first go? Normally not. Normally you touch it, you pull back, you go into the middle of the range, then you go. I.e., the dollar event could be a 2024 event or a 2023 event. I don't know. Maybe it just goes higher now. I'm currently short euros. If you look at the chart of euro's on a 50-year trend or 40-year trend. Now, those of you who say, well, the euro didn't exist then, this is the imputed euro that Bloomberg do based on the relative weightings of the basket that created the euro. So it's about as good as we've got, and it's breaking. Okay, next one up, gold. Gold does well with negative real rates. Negative real rates have been diminishing, and gold sold off. But gold seems to be now forward-looking on growth, much the same way the technology stocks are and crypto is, and it's starting to pick up somewhere that negative real rates are coming back, and gold should break out this enormous cup and handle pattern. If that is the case, i.e. every inflationist is going to give up, and the central banks are going to realize that the world is different than they thought. If that is the case, and I don't know if that's the case, but if it is, then gold goes to 2,500, 3,000, or whatever the number is. That's very interesting. It still struggles. It doesn't trade well right now. It still struggles, gets caught off and risk off. But I think if I'm right and global growth slows, gold will take off. So it's been a tough trade, but just keep your eye on it.
Money has been flowing out of the sector amid the malaise. Investors yanked roughly $120 million from crypto products last week, bringing the total outflows over the past 4 weeks to $339 million. Bitcoin last week accounted for the majority of the flows in what was the largest single week of outflows since June 2021. So, do you agree with Raoul Pal that we are not in crypto winter? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.